All right, welcome to Talk Tickers. Today, we are diving deep into the Q3 earnings for cybersecurity company Qualys. Now, the market's reaction to this report was, well, it was massive. So let's get right into what caused this stock to absolutely explode. And this is the number that really tells the whole story, isn't it? The day after they dropped their earnings, Qualys stock shot up over 20%. I mean, this wasn't just a gentle drift upwards. We're talking about a full-on rocket launch. And to put that in real dollar terms for you, the stock leaped from about $121 all the way up to over $146 in one day. Now, a move that big, it forces you to ask the question, what did Wall Street see that it loved so much? Well, that huge price jump, that is the market's verdict. It's like a big flashing sign of approval for not just how the company did last quarter, but maybe even more importantly, for where it's headed. So let's unpack the data behind that decision. Okay, so where does a story like this start? Well, it always starts with the headline numbers. And Qualys didn't just meet expectations, they completely blew them out of the water, providing all the fuel needed for that incredible rally. And you can just see the outperformance so clearly right here. The company delivered non-GAAP earnings of $1.86 per share. The consensus on the street? They were only hoping for $1.56. That is a 30-cent beat and a 19% jump from this time last year. So the big takeaway here is that their profitability isn't just strong, it's actually accelerating. And look, the strength wasn't just on the earnings line. Revenue also came in hot at nearly $170 million, beating estimates and growing 10% year over year. And current billings, which, is a great indicator of future revenue, grew even faster at 11%. But the number that really jumps off the page for me, that adjusted EBITDA margin, 49%. That is a powerful sign of just how efficient this company is. Okay, so we've seen the what, we know the numbers were great, now let's get into the why. Because numbers this good don't just happen by accident. They are the direct result of a really smart strategic shift that is clearly hitting the mark with customers. And at the very heart of that strategy is what they call the Enterprise TruRisk Management, or ETRM, platform. See, this isn't just about finding security holes anymore. It's about creating one single place, a command center, if you will, to manage, to quantify, and to fix an organization's entire cyber risk, and to do it in terms that a business can actually understand. What's really fascinating here is how the CEO, Sumead Thawker, explains this vision. He's basically saying it's no longer good enough to just see your weaknesses. The real future, the new frontier, is understanding the actual business risk that those weaknesses create and then acting on it. It's a shift from seeing this as a tech problem to seeing it as a core business problem. And here's exactly how they're pulling that vision off. First, they're using AI agents to automate workflows, which saves their customers a ton of time and money. Second, they got their FedRAMP High Authorization. That's basically the golden ticket you need to sell to the huge U.S. federal government market. Third, their partners now drive half of their revenue. And finally, a new flexible pricing model is making it easier for customers to get on board. Every single one of these is a major growth engine firing on all cylinders. A strong quarter is one thing. That's great. But what really gets investors excited is confidence in the future. And Qualys management signaled that confidence loud and clear by raising their full-year guidance. And the new guidance, which you see on the right, it just paints a much stronger picture. They raised their revenue outlook, which is nice, but the real story is on the bottom line. They boosted their earnings per share forecast by a whole lot. That's management basically telling the market, yeah, we expect this momentum and this profitability to continue. So, with a stellar quarter in the books and a really confident forecast for the future, what does it all mean for the next report? Let's put on our analyst hat for a moment and boil this all down. Okay, here's what we're going to be watching like a hawk next quarter. First, how quickly are customers adopting that new ETM platform? Are they upselling? Second, we want to see some early wins in the federal government space now that they have that FedRAMP clearance. Third is billings growth, which is going to be up against a tough comparison from last year. And finally, that net expansion rate. That's the magic number that tells us if existing customers are spending more. We really want to see that 104% start to creep higher. So, when you put it all together, the huge earnings beat, the flawless execution on their platform strategy, and that very strong guidance raise, our rating on Qualys is for us a clear outperform. The company is showing real momentum and a strategy that sets it apart in a super critical industry.
Now for a potential trade idea. With all this momentum behind the stock, an option strategy like a bullish call spread could be interesting. Essentially, it's a way to bet on the stock continuing to rise, but it does so in a way that clearly defines your maximum profit and, more importantly, your maximum loss. It helps you manage your risk while trying to capitalize on the move.
And of course, we have to say it, this is not financial advice. This information is purely for educational and entertainment purposes. You should always do your own research before making any investment decisions.